Hey traders, Jason from Love Brothers. So it's time to talk about the state of the market. Haven't done this in a couple weeks. I'm going to talk about the indexes, going to talk about some breadth readings, going to talk about where money is flowing. Overall, market's doing just fine. You should know that. Breadth is doing pretty well. You probably know that too. But there's some rotation going on that's worth paying attention to. So that's what we're going to talk about today. Before I get started, just a quick announcement. I'll be speaking at for the Money Show online next week. So there's a link below. You can sign up to see me speak. I'll be speaking for about a half an hour. The name of my talk is going to be Characteristics of the Best Stocks. Okay. So you can see the description below. All right, let's get into this now. All right. So first of all, here is just the very simple S&P 500 daily chart going back to close to the April bottom. Everything looks fantastic here. Higher highs, higher lows. The index moves up, pulls back, moves up again, pulls back, moves up, sideways, moves up. A little bit of a dip there, July, August. Moves up again, been pretty flat for the last couple of weeks, but generally speaking, the index has been moving up and over, up, a little bit of dips here and there, no big deal, but nobody could argue that the market isn't strong and healthy and, moving up and in really, really good shape overall. Okay, there's no argument against this. Peter Lynch talks about more money being lost anticipating a correction than in a correction themselves. And this chart is a really good example of that. It's like how many people are out there saying negative things about this or that or politics or who knows what. I mean, the list is long, and yet here we are months later. The market's up a huge amount. In fact, we're like 100 days removed from the April low, and it's been one of the greatest 100-day stretches in history. So, if you're bearish, I don't know why. But anyways, here's the daily chart. Looks fantastic. All right, weekly chart. Here's the weekly. Everything looks good here too. It doesn't go back that far. Just wanted to point out we got support from the 8 EMA on the weekly. Support there. Some more support possibly today. If we take out the 8, I'll target the 21, which is down here, the orange line. So pretty decent potential move down if that actually happens. You often get a trend up above the 8 and then a dip below. In this case it didn't hit, but then you get a trend up above the 8, but then we did come down and hit. So now if I'm bullish enough that I'm actually hoping this happens. Why? Because if the S&P drops this much, then some high-quality growth stocks are going to drop 15-20%. And what does that do? That gives us a chance to buy some high-quality growth stocks at a lower price. So I'm bullish enough that I'm hoping for a pullback. I don't know if it'll happen, but that's what I'm hoping for. So everything looks great here. Possible pocket down here that we need to fill. But overall, the long side is the only side to be on for somebody who is, not day trading. Day traders obviously going to go back and forth every day. They can be long one day, they can be short another day. But if you're looking out months and you want to be, positioned with the wind at your back, the long side is the only side to be on. All right, so here is the NYSE. This is the S&P 500 versus the NYSE AD line, the 5-day moving average of the AD line. We had a divergence coming into this weekend, so you can see higher high here, lower high here, market pulling back. Market tends not to like, these pullbacks don't mean the market has to come down hard. It just usually means the market needs to pause. Okay, so we got like higher high over here and lower high over here, and what happened? The market moved sideways. Got another higher high here, lower high here. Market pulled back for 7 days. Another divergence over here. And what happened? The market has mostly moved sideways. So you get these divergences that play out. Doesn't mean the market's got to come down hard. It just typically means the market's got to elite pause and move sideways or pull back a little bit, and that's what we're getting right now. So backing up, same idea. No, this is the AD line. The last one was the 5-day moving average of the AD line. This is just the cumulative AD line. As you can see, higher highs, higher lows, just trending up. No warnings here whatsoever. At least no major warnings. So even though in the near term you get a little divergence on the last chart, this is just pointing up. It tells you that there's underlying strength here. Advancers are steadily beating decliners, and there's nothing to be worried about overall. All right, let's move on. Here is the S&P 500 versus Russell 3000 stocks above their 5-day moving average. Okay, so when the market moves up, a lot of stocks should be above their 5-day moving average. When the market moves down, some of those stocks are going to lose their 5-day moving average. It's no big deal. All right, so what we got going into the weekend here, we got higher high here because the S&P had printed an all-time high, but even before that all-time high, the number of stocks above their 5-day moving average had already started to drop. So I mean, there was the high, but we're already well off the high. So even as the market was pushing higher, enough stocks were pulling back, dropping below their 5-day moving average to give us a divergence here. Market doesn't have to crash. It just means there's some weakness beneath the surface. Not a lot of stocks participated on that most recent push higher, and the market's going to probably have a little bit of softness going forward. Here's the next one. Same idea, okay, except we're using the 20-day moving average instead of the 5-day moving average. So what we have here is you have it gets pinned at a high level, and then it drops. And what happened is S&P went down and went up, and like 3-4 weeks later, it's basically the same. Okay, another divergence. We had a divergence here, market up, number of stocks above their 20-day moving average down. And what happened? The market moved up, it moved down, and moved up. And a couple weeks later, it's basically unchanged. Now we have a situation where it moved up to a decent level, sat up there for a little while. Now it's dropping. So, whether you fall out of a high level like this or whether you get a divergence like this, what tends to follow is the same thing. You get some up and down movement, and then a couple weeks later, the market is unchanged. Okay, so that's kind of what I'm looking for now. I don't expect the market to run away here. I expect it to pull back a little bit, rest, digest its gains, but I don't expect a big move down. Here is the S&P 500 up top versus the 5-day high low. So the number of stocks hitting a 5-day high minus the number of stocks hitting a 5-day low. Market moves up. The 5-day high low was already moving down. So even though the market was moving up to an all-time high, there were less stocks printing even 5-day highs. Okay, so just looking for a little bit of a pullback, a little bit of a pause. Okay, market doesn't have to come down hard. It doesn't have to last long, but it just tells you that last push up over here came with less participation. The market's probably going to be soft after that, at least for just a little bit. All right, here's same idea, except we're using 1 month high low instead of the 5-day high low. Same exact thing happened. Market pushed up. 1 month high low, pushed down, or I shouldn't say pushed down, but it failed to move up. Same thing, just looking for a little bit of a pause in the near term. And you can see right now we're under zero. So there's 85 more stocks have printed a 1 month low than a 1 month high. Okay, so even though the S&P has only fallen a couple days and is still way above its monthly 1 month high, the 1 month is somewhere around. That's July 28th. So the 1 month ago was probably somewhere around here. Even though the S&P is closer to its 1 month high than 1 month low, there are more individual stocks at a low than a high. So a little bit of weakness beneath the surface, not a huge deal overall, but definitely in the near term, it tells us there's some softness. Let's look at some comparison charts. S&P 500 higher high last week, NASDAQ lower high. The market doesn't really like that much. Okay, the NASDAQ still has most of the tech stocks, and I know there's some quality ones in the S&P, I should say at the NYSE, but market likes the NASDAQ to lead. It wants tech to lead. Okay, the market is not going to go in a rip-roaring bull market while tech gets left behind. So you get a higher high from the S&P and a lower high from the NASDAQ. It's a short-term warning. Couple others here. Here's communication stocks, which is controlled by Google and Meta. Lower high here, energy stocks keep going up, higher high there. It doesn't mean money is coming out of communication and into energy. I mean, most of communication is just tech anyways. So it does kind of tell us, and I should also say, like, this is in really good shape over here. You got a move up, you got a consolidation, then you got another move up, and then you get another consolidation. Nothing wrong here overall, but it's in the short term when you get, energy moving up to a higher high and communication coming down, it's a little bit of a warning. Last one, here's tech versus financials. Tech, lower high, financials, new high. So again, money coming out of tech going into other things. Okay, so overall, it's just like, when you look at S&P higher high, NASDAQ lower high, when you see tech, communications and such lower high, and you can see financials and energy higher high, you see money's rotating around a little bit. All right, so overall, I'd say market's in great shape, daily, weekly charts, but in the very near term, money is rotating around, coming out of tech, going into some other things. Breadth has softened in the near term. The last push up to a higher high from the S&P was not matched with breadth expanding, okay? And in pretty much every case, you have less stocks participating, less, the high-low declined, stocks above moving averages declined, advanced decline line declined. Okay, so overall market in great shape. Near term, I'm looking for some weakness. 2-3 weeks from now, the market could be flat. Okay, it could push down, it could push up, it could push up first, it could push down, it could do whatever. A couple weeks from now, it could be flat, which would be perfectly fine. Absolutely perfectly fine during the month of September to just be flat, digest some gains, be ready to go for an end of year run. All right, hope you got something out of this. If you want to hear me speak next week about the characteristics of the best stocks, check out the link below. I'll be speaking for the Money Show. All right, see you next time.